You wake up, you roll over, you grab your phone. It's the first thing you do before your eyes are even fully focused, before you've even had a glass of water. You open the app. You know the one. The blue icon, or maybe the red one or the green one. It doesn't matter which color they paint the logo. The mechanism underneath is exactly the same. You log in because you want to feel safe. You want to see that number, that digital reassurance that you have enough to survive another week. But this morning, the number isn't what you expected. There's a minus sign. And right next to it, a transaction you didn't authorize. Not a hack, not a thief, a fee. Overdraft protection fee, $35. You stare at it. You do the math in your head. You bought a coffee yesterday, a latte. It was $6. You thought you had $8 in the account. Maybe a subscription hit at midnight. Maybe a gas hole didn't clear. It doesn't matter what happened. What matters is the reality of the transaction. You just paid $41 for a cup of coffee. The bank didn't protect you. They didn't decline the card and save you the embarrassment. They let it go through specifically so they could hit you with a penalty that is 500% higher than the cost of the mistake. Pause. Let that sink in. 500%. If a street vendor charged you a 500% penalty because you were a nickel short, you would call the police. You would call it robbery. But when a building with marble floors and polished glass does it, you call it policy. You accept it. You sigh, you feel that heavy knot of anxiety in your stomach, that specific cocktail of shame and anger, and you accept that you screwed up. You blame yourself. You tell yourself you should have been more careful. You should have tracked the pennies better. You internalize the failure. And that is exactly where they want you. Now scroll down. Go past the fee. Go past the panic. Look at the transaction from the first of the month. The one in green. The one that's supposed to be your reward for letting them hold your life savings. Interest payment, 3 cents. 3 cents. They took $35 from you for a momentary lapse in calculation. They gave you 3 cents for 30 days of loyalty. This isn't a banking error. This isn't a glitch in the algorithm. This is the business model. You are staring at the single greatest magic trick in the history of finance, and the trick is so good, so absolute, that you still think you're the one being served. You walk into the branch and it's quiet. It smells like carpet cleaner and money. The air conditioning is always set to 70 degrees. The teller smiles. The manager in the glass office waves. They offer you a lollipop. They offer you coffee. They call you sir or ma'am. They ask about your day. And you think, I am the customer. Wrong. You are not the customer. You have never been the customer. Look at the structure of the relationship. In every other business on earth, the customer is the one who pays money to receive a product. You go to a dealership, you pay money, you get a car. You go to a grocery store, you pay money, you get food. But at the bank, you give them the money. You hand over your capital. You are the supplier. You are the one bringing the raw materials into the factory. So if you are the supplier, why are you paying them fees? Imagine a farmer delivering a truckload of potatoes to a restaurant and the restaurant owner charging the farmer a stocking fee for the privilege of leaving the potatoes in the kitchen. That sounds insane. That sounds like a scam. But that is exactly what account maintenance fees are. That is exactly what minimum balance fees are. You are delivering the raw inventory that they need to run their business, and they have manipulated you into paying rent for the storage space. The bank is not a vault. Get that image out of your head right now. There is no Scrooge McDuck bin in the back where your cash sits in a neat little pile waiting for you to come back. The second, the literal millisecond, your direct deposit hits that account, that money is gone. It has been lent out. It has been leveraged. It has been turned into a mortgage for your neighbor, a car loan for a stranger, a commercial line of credit for a corporation. They are charging those people 5%, 7%, 20% interest on your money. They are making a fortune on the product you supplied. And in return, They give you 3 cents and a lollipop. And the moment you try to use that money, the moment you try to access the product you supplied, if you do it in a way they don't like, penalty. If you withdraw it too often, penalty. If you don't keep enough of it with them so they can leverage it, penalty. You are not the client. The borrower is the client. The person paying the interest is the customer. They are the ones the bank is courting. They are the ones generating the revenue. So what are you? You are the livestock. You are the resource to be harvested. They need your deposits to create the loans. They need your liquidity to satisfy the regulators. And like any factory farm, they want the livestock to be docile. They want you to stay in the pen. They want you to graze quietly on the illusion of safety while they milk you for fees and shear you for inflation. This is why the lobby is nice. This is why the app is shiny. This is why the marketing budget is in the billions. It's not to serve you. It's to sedate you. They are terrified you will wake up. They are terrified you will do the math. They are terrified you will realize that the safety they sell is actually a slow, silent confiscation of your wealth. You felt that sting this morning. That $35 wasn't just a fee. It was a message. It was a reminder of the power dynamic. They hold the keys. They make the rules. And as long as you believe the lie that you are the customer, as long as you walk in there expecting service instead of extraction, you will continue to be the product. You're not safe. You're just being processed. You're standing on a street corner. It's raining. It's late. You need cash for a cab or a cover charge or a taco truck that doesn't take cards. You see the ATM. It's glowing like a beacon. It's not your bank, but you don't care. You just need your money. You slide the card in. You type the PIN. You ask for $20. The screen flashes a warning. This terminal charges a fee of $3. You hesitate. You do the calculation. It's annoying, but you accept it. You press yes. The machine whirs, spits out the bill, and you walk away. You think you paid $3 for convenience. Wrong. Check your statement the next morning. Look at the line item right below the withdrawal. Your bank, the institution you trusted with your paycheck, the one claiming to be your partner, charged you another $2.50. Non-network ATM fee. Pause. Think about the logistics of this. You paid the owner of the machine for the service of using the machine. That makes sense. But why did you pay your bank? What service did they provide? Did they drive the cash over to you? Did they hand-deliver the electrons? No. They charged you a penalty for cheating on them. They punished you for accessing your own property without their permission. You paid $5.50 to access $20 of your own money. That is a 27% tax on your own liquidity. If the government taxed you 27% on a withdrawal, there would be riots in the street. But when the bank does it, you just shrug. You call it the cost of doing business. Now shift the scene. You've had a rough month. Maybe the car broke down. Maybe hours got cut at work. Your balance dips. You're watching it like a hawk trying to keep it positive. You manage to keep it at $400. You feel proud. You survived. Then the first of the month hits. Monthly maintenance fee, $12. You call them, you ask why. The voice on the phone is polite, almost robotic. Sir, your account fell below the minimum daily balance requirement of $1,500. To waive the fee, you must maintain. You stop listening. The logic hits you like a slap in the face. They are charging you money because you don't have enough money. This is the poverty tax. This is the inverted morality of the banking system. If you have $50,000, they give you free checking, free checks, maybe even a dedicated banker. They waive the fees. Why? Because they can leverage that $50,000 to make $5,000 in loans. You are a profitable cow. But if you have $400, you are useless to them. They can't leverage you, so they have to extract value directly from your hide. They consume the principal. The poor subsidize the banking services of the rich. It gets worse. Look at the courtesy pay. That sounds nice, doesn't it? Courtesy, like they're doing you a favor. You're at the grocery store. You're buying milk and bread. You miscalculated. You're over by $2. You swipe the card. It goes through. You feel relief. Thank God, you think. They covered me. You get home. You check the app. Milk and bread, $4.50. Overdraft fee, $34. But wait, it's not just one. You bought a pack of gum earlier that day for $1 and a coffee for 3. The bank's computer system doesn't process these in the order they happened. Oh no, that would be fair. Many systems are designed to process the largest transactions first. Why? To drain the account faster. To ensure the smaller transactions, the gum, the coffee, the milk, hit after the money is gone. So instead of one overdraft fee, you now have 3. 3 charges of $34 each. $102 in fees for $5 worth of goods. This isn't an accident. This isn't bad luck. This is an algorithm designed to maximize extraction. They know exactly when your direct deposit hits. They know exactly when your bills are due. They have the data. They have the history. And they have built a trap that is triggered by your desperation. And then there's the float. You deposit a check. It's your birthday. Grandma sent you $100. You deposit it on Monday. Funds available Thursday. Why? We live in an era where you can send a video to the other side of the planet in milliseconds. High-frequency traders buy and sell stocks in nanoseconds. Data travels at the speed of light. So why does it take 3 days to verify a piece of paper? Because for those 3 days, that money is in limbo. It has left Grandma's account, but it hasn't entered yours. It is sitting in the bank's general ledger. And for those 3 days, they are earning interest on it. Multiply that by millions of customers and billions of dollars in daily deposits. That is free money. They are earning yield on your capital while telling you it's processing. They are not slow, they are stalling. Every delay, every fee, every minimum balance requirement is a meticulously engineered friction point designed to skim a percentage of your life off the top. You think you are using a utility, like water or electricity. You think you pay for what you use, but you are walking through a minefield where the map is hidden and the mines are magnets. You are not unlucky, you are being targeted. The pattern is not random. The pattern is predation. You walk past the bank. You see the thick steel doors. You see the security guard. You see the cameras. You see the heavy, polished granite counters. It all screams one thing: your money is safe here. It is locked away. It is protected. That is the single most expensive lie you have ever bought. Pause. Stop thinking about the bank as a storage unit. Stop thinking about it as a digital mattress. If you walked into that vault right now, if you could crack the code, spin the wheel, and swing that massive door open, do you know what you would find? Air. You would find dust. You would find a few stacks of bills for the tellers to use during the day. But you would not find your money. You would not find your savings. Where is it? It's gone. The second you handed that cash to the teller, the second that direct deposit hit the server, your money ceased to be your property. Legally, you transferred ownership to the bank. You didn't deposit it. You loaned it. Read that again. You loaned your money to the bank. In any other world, if you loan someone money, you dictate the terms. You check their credit score. You demand collateral. You charge them interest. If your neighbor asked to borrow $10,000 to start a business, you would want a contract. You would want guarantees. You would want a percentage of the profits. But with the bank, you do the opposite. You loan them your life savings, your hard-earned capital, the hours of your life converted into currency, and you do it with zero collateral. You do it with zero guarantees beyond a government insurance sticker that promises to print more money if the bank fails. which just devalues what you have left. And instead of demanding interest, you accept 0.01%. You are an unsecured creditor to a multi-billion-dollar hedge fund that calls itself a bank. But it gets darker. Because you are the lender, you should be the one with the power. You are the source of the liquidity. Without you, without your deposit, they have nothing to lend. They have no product. The mortgage they sold your boss, that came from your account. The car loan they gave your ex, that came from your account. You are the supplier of the raw material. Imagine you ran a lumber yard. You supply wood to a furniture factory. You bring them the oak, the pine, the mahogany. Without your wood, they cannot make tables. They cannot make chairs. They go out of business. Now imagine walking into that factory and the foreman screams at you. He charges you a fee for parking your truck. He tells you to wait in line. He tells you that you can only deliver wood between 9 a.m. and 4 p.m. He tells you that if you don't bring enough wood this month, he's going to fine you. You would laugh in his face. You would take your wood and leave. You would say, I am the supplier. You need me. I don't need you. But you don't do that with your bank. You walk in with your hat in your hand. You stand in the velvet rope line. You wait for the next available teller. You accept their rules. You accept their hours. You accept their fees. Why? Because you don't realize you are the supplier. You think you are the user. You think you are lucky to have the account. You think they are doing you a favor by holding the digits. This is the psychological inversion. They have flipped the script so completely that the person providing the capital, YOU, feels like a beggar, and the person begging for capital, the bank, acts like a king. They need your liquidity desperately. They are leveraged 10 to 1, sometimes 20 to 1. If everyone in your town went to the bank tomorrow and asked for their money back, just their own money, nothing more, the bank would collapse by lunchtime. The doors would lock. The police would come. The illusion would shatter. That is how fragile they are. That is how much they need you. But they can't let you know that. They have to keep up the theater of the granite counters and the steel vault. They have to make you feel small so you don't realize you are the giant. They have to make you worry about maintaining your account, so you don't realize they are the ones struggling to maintain their solvency. You aren't a client, you aren't a partner. You are a battery. You are a source of energy that they plug into their machine to power their real business. And when a battery runs low, they don't nurture it. They don't thank it for the power it provided. They discard it. Or worse, they drain the last few drops of energy, the overdraft fees, the late penalties, until it is completely dead. And then they ask if you want to open a credit card. You are sitting in the chair. The banker is smiling. They slide a stack of papers across the desk. It's thick. It's heavy. It looks like a manuscript for a novel nobody wants to read. Or maybe it's just a digital pad, a scroll bar that goes on forever, a tiny box that says, I have read and agree to the terms and conditions. Do you read it? Be honest. Do you actually read the 47 pages of single-spaced, 8-point legal font? Do you pass the clauses about binding arbitration? Do you analyze the cross-collateralization agreement? Do you understand the difference between the daily periodic rate and the effective annual yield? No. You don't. You glance at the first paragraph. You feel the social pressure of the person waiting for you to sign. You feel the boredom. You feel the urge to just get it over with so you can get your debit card and leave. So you scroll to the bottom. You pick up the pen. You scribble your name. Sign here, initial here, date here. And in that 3 seconds of ink drying on paper, you have just lost the war. This is the weapon of information asymmetry. It is the deliberate design of a system where one side, the bank, knows everything, and the other side, you, knows nothing. They have teams of lawyers, actuaries, and behavioral psychologists who wrote that document. They spent millions of dollars crafting every single sentence to ensure that in any possible scenario, bankruptcy, default, inflation, market crash, they win and you lose. You have, what? A lunch break, a general idea that banks are safe. You brought a plastic spoon to a knife fight. No, you brought a plastic spoon to a nuclear standoff. Think about the language they use. APR, APY, prime plus margin, variable rate, points. These aren't just technical terms. They are camouflage. They are designed to bore you. They are designed to make your eyes glaze over. If they told you the truth in plain English, you would run screaming from the building. Imagine if the mortgage contract said, "We will front you the money for this house. You will pay us back 3 times the value of the house over 30 years. For the first 7 years, almost none of your payment will actually pay off the debt. It will go purely to our profit. If you miss a payment, we take the house, keep all the money you already paid us, and ruin your reputation so you can't buy another one." That is what an amortization schedule is, but they don't call it the profit front-loading scheme. They call it standard repayment terms. And look at the credit card agreement, specifically the part about universal default. Did you read that clause? Probably not. It says that if you are late paying a completely different bill, maybe your electric bill or a different credit card with a different bank, this bank can legally raise your interest rate to the penalty maximum of 29.99%. Pause. Let that sink in. You didn't miss a payment with them. You were a perfect customer to them. But because you slipped up somewhere else, they reserve the right to gouge you here. They are watching you. They are monitoring your financial behavior across the entire grid, waiting for a single mistake so they can trigger the trapdoor. They know the math better than you. They know that if you pay only the minimum payment listed on your statement, a $2,000 TV will cost you $5,000 and take 10 years to pay off. They put that number in a big, friendly box. Minimum payment due, $25. They make it look like a favor. Hey, don't worry, just pay this little bit. It's not a favor, it's a bait. They are fishing for the people who don't understand the math. They are hunting for the revolvers, the customers who carry a balance. If you pay off your card every month, they call you a deadbeat. That is the actual industry term. A deadbeat is someone who pays their bills on time and generates no interest profit. They don't want you to be debt-free. They want you to be debt servicing. They want you on the hamster wheel, running just fast enough to cover the interest, but never fast enough to escape the principal. And they keep you there by hiding the exit signs behind a wall of jargon and complexity. You think you are playing a game of chance, but this isn't a casino. In a casino, you know the house has an edge. You know the slot machine is programmed to take your money. You walk in with your eyes open. But in a bank, you walk in thinking the game is fair. You think the rules are neutral. You think the contract protects both parties. That belief, that fairness bias, is what kills you. You trust the institution because of the marble floors and the FDIC sticker. You assume that because it is regulated, it is safe. But the regulations are often written by the very lobbyists hired by the banks. The complexity is the product. The confusion is the feature. They are betting on your ignorance. They are banking on the fact that you won't read the fine print, that you won't do the compound interest calculation, that you won't realize that overdraft protection is actually permission to charge a 4,000% markup on short-term credit. You aren't the customer being served by a complex financial instrument. You are the mark being hustled by a complex confidence game. You are sitting at your kitchen table. You have a stack of bills. You have a little bit of savings, maybe $10,000, maybe two, it doesn't matter. You look at that number in your savings account and you feel relief. Why? Because it's safe. Because if the stock market crashes tomorrow, your number stays the same. Because if the housing market implodes, your number stays the same. Because if the world burns down, at least you have that number. This is the addiction. This is the hook. The bank is not selling you financial services. They are selling you emotional sedation. They are selling you the feeling that everything is going to be okay. And like any drug dealer, they know exactly how much you are willing to pay for that feeling. You are willing to pay everything. You are willing to forfeit all potential growth. You are willing to accept a guaranteed loss of purchasing power. We'll get to inflation later. You are willing to let them use your money to make 8%, 10%, 20% returns while they toss you a fraction of a penny. Why? Because you are terrified of risk. You have been conditioned to believe that investing is gambling and saving is prudent. Your parents told you this. Your teachers told you this. Society tells you this. Save for a rainy day. A penny saved is a penny earned. Wrong. A penny saved in a bank is a penny dying. But you don't care about the math. You care about the feeling. You care about the fact that the number doesn't go down. You ignore the fact that the value of that number is crashing every single year. You ignore the fact that $1,000 today buys half of what it bought 20 years ago. As long as the digits on the screen don't change, you feel safe. The bank knows this. They have psychologists who study your fear. They know that the average person would rather lose money slowly and invisibly than risk losing it quickly and visibly. So they offer you the deal of a lifetime for them. Give us your capital. We will take all the risk. We will invest it in businesses, in real estate, in bonds. We will make the profit. And in exchange, we will promise not to lose the principal. It sounds fair until you realize what you are giving up. You are giving up your financial sovereignty. You are outsourcing your courage. You are saying, I am too scared to manage my own wealth. I am too scared to learn how money works. Please, Mr. Banker, take this burden from me. Take my money and use it. Just promise me I won't look foolish. You are paying a cowardice tax. That sounds harsh. Good, it should. Because every time you leave $50,000 in a savings account earning 0.01%, while inflation is 3% or 5% or 7%, you are effectively setting fire to your own labor. You worked hundreds of hours to earn that money, and now you are letting it rot because you are afraid to plant it. The bank loves your fear. Your fear is their profit margin. If everyone woke up tomorrow and realized that cash is a terrible long-term store of value, if everyone moved their money into assets, into real things, the banking system would collapse. They need you to be scared of the world. They need you to think the mattress is the only safe place. And they reinforce this fear at every turn. Markets are volatile, they say. Crypto is dangerous, they warn. Real estate is a bubble, they whisper. Keep it here, keep it safe, keep it with us. They are the abusive partner who tells you that you'll never make it on your own, that the world is too scary, that you need them to protect you. And you believe them. You stay in the relationship. You let them control the finances. You let them make the decisions. And you comfort yourself by looking at that stagnant number, telling yourself you're being responsible. You aren't being responsible. You are being passive. There is a difference. Responsibility means maximizing the value of your labor. Responsibility means understanding that risk is the price of growth. Passivity is just hiding under the bed and hoping the monsters go away. The bank is the monster under the bed, and you are feeding it. You are trading your financial freedom for the illusion of safety. And the irony, the safety they offer is the most dangerous thing of all. Because while you are huddled in the corner with your savings account, the rest of the world is moving on. Prices are rising. Assets are appreciating. The rich are getting richer using your money. And you're just staying safe, safe and poor. You walk to the mailbox. You pull out a stack of envelopes. Most of it is junk, but there's one that feels different. It's thick. It's glossy. You have been pre-selected. 0% APR for 18 months. Platinum status. You feel a little spark of pride. They want me, you think. I must be doing well. Stop. Tear that envelope in half. They don't want you because you're doing well. They want you because you are a potential host for their parasite. This is the deep dive into the debt product. And make no mistake, debt is a product. It is the most profitable product in the history of commerce. It is packaged, marketed, and sold just like cigarettes or sugar. But unlike cigarettes, which just kill you, debt keeps you alive so it can harvest you. The genius of the debt product is that it feels like freedom. You swipe the card, you buy the dinner, you book the flight. You get the dopamine hit of acquisition without the pain of payment. You feel rich. You feel powerful. You are living the life you deserve. Then the statement comes. And here is where the trap snaps shut. Look at the box, the minimum payment due. Let's say you spent $5,000 on a dream vacation. The bill arrives. You expect to see due $5,000. But instead, you see a friendly, manageable number. Minimum payment, $125. You exhale. Oh, I can afford that, you think. That's easy. You have just swallowed the poison. That number, $125, is not calculated to help you pay off the debt. It is calculated to keep you in debt for the maximum amount of time legally possible. It covers the interest and a tiny, microscopic sliver of the principal. If you pay that minimum every month, do you know how long it will take to pay off that vacation? 27 years. You will be paying for those margaritas when your children are in college. You will be paying for that hotel room when the hotel has been demolished and rebuilt. And the cost, you won't pay $5,000. You will pay $12,300. You will pay for the vacation 2.5 times. This is the revolver model. Banks classify customers into two groups, transactors and revolvers. Transactors are people who pay their full balance every month. The banks hate them. They call them deadbeats because they can't harvest any interest from them. Revolvers are people who carry a balance. People who pay the minimum. People like you. The banks love you. You are the golden goose. You are the product. They have engineered the entire experience to turn you into a revolver. Why do you think the minimum payment is the most prominent number on the bill? Why isn't the amount to pay to avoid interest in bold red letters? Because that would be bad for business. That would help you exit the trap. They want you to look at the $125 and feel relief. They want you to anchor your budget to that number. I can afford $125 a month, you tell yourself. So you buy the furniture. You buy the clothes. You stack the minimum payments on top of each other until your entire paycheck is devoured by the interest. You think you are buying things. You are actually selling your future labor. Every time you swipe that card and don't pay it off, you are selling hours of your life next month, next year, next decade to the bank. You are working for them now. You wake up, you go to your job, you stress out, you deal with your boss, and a percentage of that sweat goes directly to the bank to pay for a dinner you ate in 2019. This is indentured servitude with better marketing. And they don't stop there. They increase your credit limit. Congratulations, we've raised your limit to $10,000. They frame it as a reward. You've been good, here's more trust. It is not a reward, it is a longer rope. They know that humans consume to the level of their available liquidity, If they give you more space, you will fill it. They are betting on your lack of discipline. They are handing a loaded gun to a toddler and waiting for the bang. And when you finally stumble, when you miss a payment, the velvet glove comes off. The interest rate spikes to 29%. The late fees hit. The calls start. Suddenly, the partner who gave you the platinum card is the predator threatening your livelihood. The debt product is designed to be easy to enter and impossible to exit. It is a lobster trap. The bait is sweet. The entrance is wide. But once you are in, the walls close in, and the only way out is to claw your way through years of compound interest. You aren't the customer buying credit. You are the product being milked for yield. You open a drawer. Maybe it's in the kitchen, maybe it's an old shoebox. You find a receipt. It's faded, the ink barely legible. It's from 5 years ago. You squint at the date. You look at the total. Grocery run. Milk, eggs, bread, chicken, vegetables. Total, $42.50. You stare at it. You laugh, a hollow, bitter laugh. You just came from the store an hour ago. You bought the exact same things. You know what the total was today. $87. Pause. Look at your savings account, the one you're so proud of, the one with $10,000 in it. You put that money there 5 years ago. You saved it. You kept it safe. And in those 5 years, while it sat in the vault, while it earned its pathetic 0.01% interest, it lost half of its power. It's still $10,000. The number hasn't changed, but the reality has. That money can now buy only half the groceries, half the gas, half the life it could buy when you earned it. This is the silent theft. This is the invisible tax that you never voted for, never signed up for, and can never escape as long as you play their game. And here is the dark secret. The bank knows this. The bank knows that cash is trash. They know that fiat currency, the dollars, the euros, the yen, is designed to lose value. It is designed to melt like an ice cube in an oven. So why do they want you to hold it? Because while you are holding the melting ice cube, they are using your water to grow their garden. When you deposit that $10,000, they don't put it in a box. We establish that. They lend it out. But what do they lend it for? They lend it to people buying houses. They lend it to corporations buying machinery. They lend it to investors buying land. They lend it for assets, real things, things that go up in price when inflation hits. Think about the mechanics of this. You give them your money. They pay you 0.5%. Inflation is running at 4%, 5%, maybe 8% if you count the things you actually buy, food, energy, housing. So your real return is negative. You are losing 4% to 7% of your wealth every single year just by standing still. Meanwhile, the bank takes your money and lends it out at 7%. They are making the spread. But more importantly, the people borrowing the money are using it to buy assets that are appreciating. The house goes up. The stock market goes up. The price of gold goes up. Everyone is getting richer, except the person holding the cash. You. You are the sucker at the table. You are the one holding the bag. You are the one tasked with holding the depreciating asset while everyone else uses it to acquire appreciating assets. The bank is effectively short-selling your own money against you. They are betting that the dollar will be worth less tomorrow than it is today, and they are using your dollars to make that bet. And they win every single time. This is why they tell you cash is king. This is why they tell you save for a rainy day. They need you to believe in the stability of the currency so that you will keep hoarding it. If everyone realized that their savings were burning, they would rush to spend it or invest it. The velocity of money would explode. The system would destabilize. So they need you to be the dam. They need you to hold the water back while they channel the energy into their turbines. You feel this theft every time you go to the store. You feel it every time you pay rent. You feel it in the pit of your stomach when you realize that despite getting a raise, you feel poorer than you did 3 years ago. You are poorer. You are running on a treadmill that is speeding up. You are working harder, earning more digits, but acquiring less life. And the bank is the one controlling the speed of the treadmill. They are the ones printing the money via the central bank system that causes the inflation. They are the ones lending the money that bids up the price of houses so you can't afford them. They are the arsonists who set the fire, and then they sell you the water to put it out at a premium. You aren't just losing money. You are losing time. You are losing the life force you spent earning that money. Every percent of inflation is a percentage of your past labor being erased from history. And you thank them for keeping it safe. You open the app, you scroll past the balance, you tap the little gauge icon. The needle spins, it lands on a number. Excellent. A little burst of dopamine hits your brain. You smile. You feel valid. You feel like a responsible adult. You feel like you're winning the game. Stop. Who designed the game? Who decided that 850 is the perfect score? Who decided that 600 is a failure? The banks, the lenders, the credit bureaus. Do you think they designed a metric to measure your financial freedom? Do you think they built a system to celebrate your wealth? No. Your credit score is not a measure of how rich you are. It is not a measure of how much money you have in the bank. You could have $10 million in cash, no debt, and no credit history, and your score would be zero. You would be a ghost. You would be considered unscorable. So, what does it measure? It measures how good you are at being in debt. Read that again. It is an I love debt score. It is a how much profit can we squeeze out of you score. To get a perfect score, you have to play by their rules. You have to open credit cards. You have to take out loans. You have to keep the accounts open for years. You have to use them regularly. You have to prove over and over again that you are willing to interact with their products. If you pay cash for your car, no points. If you pay cash for your house, no points. If you save 50% of your income, no points. But if you borrow money for a car and pay them interest for 5 years, points. If you get a mortgage and pay them interest for 30 years, points. If you open 5 credit cards and juggle the balances, points. They are training you like a dog. Sit, they say, and you open a card. Stay, they say, and you keep the account open even when you don't need it. Roll over, they say, and you take out a loan for a sofa. And when you do the trick correctly, when you generate the interest and the swipe fees, they pat you on the head and give you a treat. They give you a higher number. They give you a shiny badge that says 800. And you wear that badge with pride. You brag about it at dinner parties. Oh, I have an 820 credit score. You are bragging about how well you wear the leash. Think about the specific mechanics of the score. One of the biggest factors is average age of accounts. To have a high score, you need old accounts. So what happens if you pay off a credit card and close it? Your score drops. Pause. You did the responsible thing. You eliminated a liability. You simplified your financial life. You reduced your risk. And the system punishes you. It subtracts points. It tells you that you are now less trustworthy. Why? Because you cut the cord. Because you removed a potential entry point for their parasites. By closing the account, you told the bank, I don't need you anymore. And the bank hates that. So they rig the algorithm to force you to keep the channel open. They force you to keep the card in your drawer, to use it once in a while, to keep it active, to stay tethered to the system. They have gamified your obedience. They have turned debt into a status symbol. In any sane society, debt would be something to avoid. It would be a tool for emergencies, not a lifestyle. But they have successfully convinced an entire generation that you need to build credit. You have to build credit to buy a house, they say. You have to build credit to get a car, they say. You have to build credit to get a job, they say. They have made the score the gatekeeper to society. If you don't play their game, if you don't use their products, they lock you out of the economy. They make it harder to rent an apartment. They make your car insurance more expensive. They are extorting you. Use our debt products, or we will make your life difficult. That is the message. That is the threat. And you comply. You obsess over the number. You sign up for the monitoring services. You fret when it drops 3 points. You celebrate when it goes up 5. You are a hamster in a wheel, running as fast as you can to chase a digital carrot that leads to nowhere. A billionaire who pays cash for everything has no use for a credit score. A person who is truly financially free doesn't care what Experian thinks of them. But you care. You care because you are still in the trap. You care because you still need their permission to live your life. The credit score is not your friend. It is the serial number on your ankle monitor. And every time you check it, every time you try to improve it, you are just tightening the strap. You are angry. Good, you should be. You should be furious that your labor is being stolen. You should be disgusted that your trust is being weaponized. You should be sickened by the realization that you are feeding a parasite that views you as nothing more than a host. But here is the hardest pill to swallow. Here is the part of the documentary where most people turn it off because it gets too personal. Who signed the paper? Who walked into the branch? Who downloaded the app? Who tapped "I agree" without reading a single word? You did. You are not just a victim. You are a volunteer. The bank didn't put a gun to your head. They didn't force you to open that specific account. They didn't force you to use that specific card. They didn't force you to carry a balance. You chose it. And you chose it for the most pathetic reason of all: convenience. You chose the bank with the shiny app because it was easier than researching a local credit union. You chose the credit card with the points because you wanted a free flight, ignoring the mathematical reality that the points are funded by the misery of the people who default. You chose to keep your money in a 0.01% savings account because moving it to a treasury bill or a high-yield account took 3 extra clicks. 3 clicks. That was the price of your financial sovereignty. You sold your future for 3 clicks of convenience. You complain about the fees. You whine about the low interest rates. You moan about the system being rigged. But what do you do about it? Nothing. You stay. You keep the direct deposit running. You keep the auto-pay on. You keep swiping the card. Every time you swipe that card, you are casting a vote. You are voting for the system to continue. You are telling the bank, "I accept your terms. I accept your fees. I accept your surveillance. Please continue to harvest me." You are the enabler. You are the battered spouse who keeps going back to the abuser because it's too hard to move out. You tell yourself, all banks are the same. You tell yourself, "I can't change the system." Those are lies. Those are excuses designed to protect your ego from the uncomfortable truth. You are lazy. You are financially lazy. You spend 40 hours a week working hard to earn the money, but you won't spend 40 minutes a month managing it. You would rather let a corporation strip mine your wealth than take responsibility for your own capital. You are complicit in your own robbery. Think about the rewards you chase, The cash back, the airline miles, the status. Do you really think they are giving you free money? Do you think a multi-trillion-dollar industry just gives things away? Those rewards are a bribe. They are a cut of the loot. They are giving you a tiny percentage of the transaction fees they charged the merchant, which raised the price of the goods you bought, and the interest they charged the single mother who couldn't pay her bill last month. When you use the platinum card to get into the airport lounge, you are walking on the backs of the people drowning in debt. You are part of the ecosystem. You are eating the scraps from the predator's table and calling yourself a king. You have been bought. And the price was cheap. A free checked bag, a 2% discount on gas, a feeling of importance when you pull out a metal card. Is that what your freedom is worth? You look in the mirror and you see a smart, independent person. The bank looks at you and sees a docile, profitable battery. And as long as you refuse to move your money, as long as you refuse to read the fine print, as long as you refuse to opt out of their game, the bank is right. You are proving them right every single day. You are the one keeping the lights on in the skyscrapers. You are the one funding the lobbyist who writes the laws against you. You are the one validating the algorithm. The system isn't broken. The system is working exactly as designed. It is designed to extract wealth from the passive and transfer it to the active. And right now, you are the definition of passive. You are waiting for someone to save you. You are waiting for the government to fix it. You are waiting for the bank to grow a conscience. Wake up. Nobody is coming. The cavalry isn't coming. The bank isn't going to suddenly decide to stop making billions of dollars off your ignorance. The only person who can stop the extraction is you. But that requires effort. That requires discomfort. That requires you to admit that for the last 10, 20, 30 years, you've been a willing participant in a con game. It hurts to admit that. It's shameful. It's embarrassing. But that shame is the only thing that can save you. Hold on to it. Let it burn. Let it burn away the excuses. Let it burn away the laziness. Because in the next act, you have to make a choice. And you can't make that choice if you're still lying to yourself about your role in the crime. The screen is about to go black. The algorithm is already queuing up the next video, a celebrity clip, a gaming stream, something to numb you back into submission. This is the most dangerous moment. This is the moment where 99% of people nod their heads, say, "Wow, that's messed up," and then do absolutely nothing. They go back to the app. They go back to the fees. They go back to being livestock. You have a choice to make, not tomorrow, not when I have time, right now. Option A, the battery. You close this video. You tell yourself it's too hard to switch. You tell yourself the system is too big to fight. You keep your money in the big bank with the marble floors. You keep paying the maintenance fees. You keep earning 0.01% while inflation eats your life. You keep stressing about your credit score like a good little servant. If you choose this, you deserve what happens. You deserve the devaluation. You deserve to work until you are 75 because your savings were stolen by the silent tax. This path is easy. It is comfortable. It is the path of the victim. Option B, the sovereign. You stop acting like a customer and you start acting like a CEO. You fire your bank. This is not a metaphor. You literally fire them. Step 1. Move to a credit union. Stop feeding the megabanks. Move your checking to a local credit union. They are non-profits. They are owned by the members, you. They don't have shareholders demanding quarterly growth at your expense. Their fees are lower. Their rates are better. They don't gamble with your deposits on Wall Street derivatives. It takes one afternoon to switch. One afternoon to cut off the parasite. Step 2. Kill the savings account. Stop treating the bank as an investment vehicle. It is a parking lot. It is a toilet for your cash flow. Keep 1 month of expenses there for immediate bills. That's it. Move the rest to assets. Buy short-term government treasuries, where you get the risk-free rate, not the bank. Buy index funds. Buy gold. Buy real estate. Buy anything that cannot be printed by a central banker. Stop lending your money to the bank for free so they can lend it back to you at 20%. Step 3. Weaponize the credit card. If you use a credit card, you set it to autopay the full statement balance every single month. Never, ever pay a cent of interest. Use their reward system against them. Be the deadbeat they hate. If you can't trust yourself to do that, cut the card up. Use debit. Use cash. Financial slavery is not worth the airline miles. Step 4. Opt out of the status game. Stop checking your credit score every week. Stop caring if it's 780 or 800. Build real wealth, assets, equity, ownership, and the score becomes irrelevant. A bank loan is a tool for leverage, not a badge of honor. The bank is betting against you. They have run the simulations. They have the data. Their models say that you are lazy. Their models say that you are scared. Their models say that you will watch this video, feel a moment of anger, and then go right back to swiping the platinum card because it makes you feel special. They are betting on your inertia. They believe they own you. They believe you are too dependent, too distracted, and too weak to walk away. Are they right? Look at your bank app one last time. Look at that fee. Look at that interest rate. That is the price of your passivity. You can close the account. You can move the money. You can refuse to be the product. But you have to move. You have to endure the friction of change. You have to fill out the forms. You have to change the direct deposit. It's annoying. It's boring. It's a hassle. But that hassle is the price of your freedom. The bank is counting on you to do nothing. Disappoint them.